What's good, YouTube? It's your boy Charles Enoch. I know it's been a minute, but we back with another Invest in Myself episode. So let's get to it. So I know it's been a while, but your boy had a lot going on. Had to work some extra hours from the 9 to 5, getting some issues resolved with the new rental property that I got in February. But I did have an amazing trip in Aruba. So everything wasn't all bad. So if you're watching this video, take a little time in the comments, say welcome back. So you already know the drill. Before we get started, your boy got to do the YouTube thing. So I know I've been slacking with the uploads, but your boy is still trying to hit 10,000 subscribers before the end of this year. I know it's a crazy goal, but it's my goal. So I need you to help me make this happen. So if you haven't done so yet, go ahead, hit that subscribe button, hit that like button for me. It helps me reach a higher audience base, and I really do appreciate it. So in these past couple months, I received a few more clients, and most of them are focused on paying off their credit cards. So I figured, let's go over a velocity banking technique that will help you pay off your credit card without paying any interest. So the first thing we need to understand when we're using this technique, income pays credit, credit pays expenses. So we're basically using our credit card just like a bank account. So let me break this down for you. When you put money on your credit card, the money is not lost, meaning that you can use this money to pay your expenses. And while you're putting money on your credit card and paying off the statement balance, once you pay the statement balance off, you avoid interest for that month. You then turn around, use that credit card that you just paid off to pay your expenses. So for example, let's say that you have a credit card balance of $1,000 and you have income coming in that's $1,000 and your expenses are $800, meaning that you have a cash flow left over at the end of the month of $200. If you put the $1,000 of income that you receive onto your credit card, you pay the credit card off in full. Once you do that, you use your credit card to pay $800 of expenses. What's left on the credit card is the $200. So now your credit card balance is only $800. You would repeat this 4 more times and your credit card would be paid off, and thus you avoided any interest because you're paying off the credit card in full every month. So I know this may sound complicated, but you already know I got the whiteboard in the back, so we're gonna break it down even further. Let's go. All right, so on the whiteboard, you already know we get down to business. So let's look at our example today. We're gonna have a family here. We're gonna say that their income is gonna be $7,000 per month. Their expenses are gonna be $4,600 plus the rent is gonna be $2,000. So that total is $6,600 for expenses. And you'll see why I broke rent down more further than expenses here. So the cash flow is going to be $400, which means it's $700 or $7,000 you bring in income. The expenses that you're spending is $6,600, which means that you're left with $400 at the end of every month. Now the credit card they're trying to pay off is $4,800. And we're going to say the minimum payment on the credit card that you have to pay per month is going to be $200. They're going to have an astronomical interest rate of $35 there. So remember, income pays credit. Credit is going to pay our expenses. So I'm going to go on the other side of the board and we're going to break it down with our real life example. Right, so on the other side of the board, we're going to say that it is January 1st here. So first we're going to look at the equation. So our income, we want to pay our credit card off in full, right? So we're going to use $4,800 of our $7,000 of income. We're going to put that onto the credit card. That's going to pay the credit card off in full. Every time we pay the credit card off in full, means that we avoided any interest for that month. So what happens here, since we paid the credit card off, it increases our cash flow by $200 and decreases our expenses by $200. Why? Because the credit card was part of our expenses. Remember, our $200 is minimum of what we had to put on the credit card. So that was part of our monthly expenses. Now, the next step, we are going to take the remainder of our money, which is going to be $2,200. We're first going to pay the rent. We got to have the roof over the head, right? So the rent is $2,000, and then our expenses, they were $4,600. But remember, step one, our expenses decreased by $200 because we paid our credit card off, right? So our expenses are only $4,400, and we have $200 left out of the $2,200 of the remainder of our income. So our expenses after that will be $4,200. Now, the next step, since our credit card is paid in full, and remember, all we pretty much did was transfer the $4,800 onto the credit card. Now we can use that $4,800. We're going to pay the remainder of our expenses, the $4,200, which means that we have $600 left on our credit card. So let's look at the month of January here. The debt on the credit card is $4,200 because we only have $600 on the credit card. The amount that we paid off, $600, which is our cash flow, right? And the interest we paid is $0. So one thing to note here, the rent, a lot of times people can't pay rent with their credit card. And this is why I broke the rent down separately, where you would have to have cash to pay that rent. Right, so we're in the month of February. We're gonna look at the end of January, see where we left off here. So we had a debt of $4,200 on our credit card. So we're gonna go to step one. We're gonna take $4,200 of our $7,000 in income, put that onto the credit card. Guess what? We paid that credit card off. It frees up $200 of cash flow and minuses $200 on our expenses here because the credit card is no longer an expense, right? Now, we're going to take the remainder of our income, which is going to be $2,800. First, keep the roof over our head, pay that $2,000 of rent, and then we're going to throw $800 of the remainder of our income onto our expenses. That is going to leave our expenses at $3,600. Now, we paid off our credit card. It's back to $4,800. We're going to use our credit card to pay the remainder of our expenses. This leaves $1,200 left on our credit card. So let's look at what February brings us here. So the debt on our card is $3,600. We've paid off $1,200. Remember, our cash flow is $600, and the amount we paid total is $1,200. All right, so we're in the month of March, so we got to see what happened at the end of February here. So we're at $3,600 that we owe on the credit card here. So we're going to take $3,600 of our $7,000 of income, put that straight on the credit card, pay it off. We're avoiding all the interest here. That frees up $200 of cash flow, and the expenses are minus by $200 because the credit card is paid off. It's no longer an expense, right? Second step is we're going to take $3,400, pretty much the remaining income that we get per month. We're going to put $2,000 on the rent, and then we're going to throw $1,400 on our expenses, right? So our expenses are going to be $3,000 after we do all that with our cash. Now remember, credit's going to pay our expenses here, right? So our credit card is paid in full. We avoided any interest. We have $4,800 to use. We're going to use $3,000 swipe and use $3,000 up, right? So we're going to have $1,800 left on our credit card. So let's look at the end of March. we have $3,000 that we owe. We paid $1,800 off, and we still have avoided any interest on that credit card. All right, so we're in the month of April. So let's see where we ended in March. March, we owed $3,000. So we're gonna take $3,000 of our income, put it on our credit card, pay it off in full, avoid that interest. Our cash flow goes up by 200. Expenses are minus by 200, no longer an expense. We're gonna use the remainder of our income first, pay our rent, keep a roof over our head, and then we're gonna go throw $2,000 on the $4,400 of expenses. This leaves $2,400 of expenses. Now we're gonna use our credit card, which we paid in full to avoid any interest. Got $4,800 on there. We're gonna use half that, $2,400, and we're gonna be left with $2,400 on the credit card. So let's look at our debt for April. We have $2,400 that we owe on the credit card. We paid off $2,400. All right, so we're in the month of May. Let's see where we left off in April. We left off at $2,400. So guess what? We're gonna take $2,400 of our income, put it onto our credit card, pay it off in full, cash flow increases, expenses go down by $200. We're gonna take the remainder of our income, $4,600, first pay our rent, and then we're gonna throw some onto the expenses here, $2,600 on the expenses. That leaves us at $1,800 left for expenses. Now we're gonna use our credit card. Since we paid it in full, avoided any interest, we're gonna use $4,800. We're gonna use $1,800 of the $4,800, and we're gonna be remainder of $3,000 left on the credit card. So let's see what this pans out in May here. So in May, we have $1,800 left. We're slowly taking $600 chunks every single month out of that credit card, right? And then the amount that we've paid off total so far is $3,000. So we're close. All right, so we're in the month of June. So let's look at the prior month of May. We had $1,800 balance on our credit card. So we're gonna take $1,800 of our income, pay the credit card off in full, avoid the interest, frees up some cash flow, and minuses some expenses for us, $200 to be exact. The income, the remainder of our income is $5,200. We're gonna first throw it on the rent, and then we're gonna use the remainder that we have on our expenses here. That is gonna leave our expenses at $1,200 left. Guess what we're gonna do? Credit pays expenses, right? So we're gonna use our credit card. We're gonna charge $1,200 on that credit card for all the rest of our expenses. $3,600 is left on our credit card. So let's take a look here. So for the month of June, we have a debt of $1,200, another $600 chunk on there, right? The amount that we've paid off so far is $3,600 and still avoided all interest. All right, so we're in the month of July here. Let's look at the previous month to see what our debt is. Our debt is $1,200. So the first thing we're gonna do, we're gonna take $1,200 of our income, throw that onto the credit card, pay it off in full, avoid any interest. Our cash flow increases by $200. Our expenses decrease by $200. And then we're gonna take the remainder of our $7,000 of income, $5,800, put it on the rent, and then the rest, we're gonna put it onto our expenses. We're left with $600 of expenses to pay. We're gonna use our handy dandy credit card, $4,800 we have available because we paid it in full. We're gonna take $600 off, and then what's left on the credit card is gonna be $4,200. So let's see what our debt balance is, right? For July, it's gonna be $600. So we got one more month to pay off. The amount that we've paid off so far is $4,200. All right, the last month, the month of August, let's get it drilled into your head. You already know here. So we got to look at July. We had $600 of debt on our credit card. We're going to take $600, pay that credit card off, paid in full. It increases our cash flow, and then lowers our expenses by $200 because it is no longer an expense, right? So the income we have left is $6,400. Guess what? It's enough to pay for our rent, which is $2,000, and our expenses that are $4,400. So the remainder of our expenses are zero. So this next step, we don't even have to take. We got our credit card at $4,800. We ain't got no expenses. So what's left on the credit card? $4,800 here. So let's look at August, $0 of debt for the credit card. We paid off the $4,800, zero interest accrued for all 8 of those months. So this is how you do velocity banking with your credit card without paying any interest. Now, obviously, this is a perfect scenario. Sometimes you cannot avoid all the interest. So since the credit card is paid by simple interest, the more that you can keep on the credit card to lower the balance, it accrues daily here. So you're still saving a lot of interest even if you can't pay off the statement balance in full. Now, I hope this was helpful. If you have any questions, definitely shoot me an email or put it in the comments. I'll definitely get to it and try to answer it as soon as I can here. Remember, if you haven't done so yet, please subscribe to the channel, hit the like button, and leave a comment. And like always, you guys have a good weekend. Peace out.